Big news, people. Ray Dalio, the famous investor, hedge fund manager of Bridgewater Associates, his latest 13F filing is out, and it's big news. He's got rid of Alibaba and he's dumped JD.com. So let's have a look at his F13F filing and see why he's done that. Hello, I'm Working Dad Trader, and this is my channel, so welcome. I'd really appreciate it if you give my videos a like, and if you haven't already, then please subscribe, and then you can catch all the latest videos that I do, and it would really help my channel grow and get out to more people like yourselves. Okay, thank you very much. Let's get on with it. And as we look at the 13F filing straight away, we can see what he's sold in the last quarter. Bear in mind that these filings are a couple months old, because they get a period of time before they have to file them, but it gives us some idea and some thought on what's been happening in his mindset. And we can see straight away, if we look at Alibaba and JD.com, he has 0 stock left. He's completely sold out of these two companies, which was a massive shock to me, being that I hold not JD.com, but I hold Alibaba and Tencent and stuff like that in my Trading 212 portfolio. If you haven't caught those videos and my updates on that, then go and catch them out, and you can see that I hold those stocks and they have been massively down this year for me. So this was really interesting, caught my eye straight away why he's done this. If we move on to what he's bought in the last quarter 2, we can see that he's been buying lots of the S&P 500 ETF. He's been buying CVS Health, MasterCard, Alphabet and Facebook are his 5 big purchases where he's been buying in the last quarter 2. A big change there, definitely going away from China, going away from a lot of emerging markets and going into other stuff, more US American companies. If we look down at his portfolio breakdown of his percentages, it's a lot more watered down than it was in quarter 1. It's a lot more stocks he's holding now. But we can see that he's been heavily investing in Procter & Gamble. He has been doing that pretty much all year. He did a lot of that last quarter 1. He was investing in Procter & Gamble, and Johnson & Johnson is another one that he's invested quite a lot on. I think possibly why he's done that is because he sees recessions, and if recessions hit the US and especially around the world, then both Procter & Gamble and Johnson & Johnson do products that even during recessions, during bad times, we still need these products for everyday use. So it's going to be the more of the luxury stuff that we cut out, but lots of different things like normal day stuff like shampoos and razors and stuff, we're going to still need, whether we're struggling for money or not, we're still going to need these products to carry on. And I think possibly that's why he's looked at these safe stocks. And if we compare his percentage breakdown from last time, we can see last time his biggest holding was the S&P 500, but I think where he's bought into different stuff, it's sort of watered it around. He's been very heavy, like I say, in Procter & Gamble, and that's overtook the S&P 500. And we can see that on last time, quarter 1, Alibaba sitting there at the bottom, quite a big holding within his portfolio, and he's completely sold it out. So we move on to my thoughts and my take on a lot of the stuff that he's been doing. As we can see on the chart, the Chinese stock market, and I've been feeling this pain all year myself, has been down all year. It's been down massively all year. There's been lots of things going on in China, what with the really hard lockdowns, the zero policy lockdown, so they locked everyone down. Zero policy for COVID has really affected their economy and their market. They've been having a lot of crackdowns from the government on different sectors, and they pretty much finished now the technology sector, bringing in strict laws and rules and regulations on them, and the tech sector has really, and the e-commerce sector has really struggled through that period. It's been in a massive bear market for nearly all year, really. And if we move on to some of the stocks that obviously he's got rid of, Alibaba, which I hold in my portfolio, it's down 43% this year alone. So that has really struggled, which is really interesting, because when you look at their financials, Alibaba's financials, they're really quite strong. But again, I think it's the macro factors that have been really hitting Alibaba, and the stuff that's going on above, the political stuff, that have really sort of hammered Alibaba as a stock. The other one, if we look at, is JD.com. Nowhere near as bad as Alibaba, but still 19, nearly 20% down for the year. Again, you look at the financials and they're really quite good. But again, I think it's just all the massive macro factors and everything that's been happening to China that has made this the whole stock market just go right down from where it was over a year ago. It's been a massive downward trend for a long time. Another thing as well is if you're a big Ray Dalio fan, I really recommend reading one of his new books, which is The Changing World Order. It's a book where he's really delved deep into the history of the US, and China, gone way back into the dynasties, and really looked at the histories of the superpowers through history and how they grew and how they changed, how they were challenged by an upcoming superpower and how that superpower declined. So it's really, really interesting, and it also gives you an insight into his thoughts and what he's thinking about, and this beginning to start making sense of what he's doing now. So that's a really good book, and I recommend that. Other things as well that he's been saying in the press just recently in the last week or so. We look at this article, in this he's put, if events continue to follow this path, this conflict will have a much larger global impact than the Russia-Ukraine war, because it is between the world's leading superpowers that are economically much larger and much more intertwined. So he's talking about the China-US threat, recently about what's happened with Taiwan and how this conflict is really bubbling up. And I think his fears here are that he's, after reading history and historical events, that he feels that we're on the same path. About obviously for years since the end of the Second World War, the US has been the dominant world superpower, but China is catching them up and almost caught them up now, and has been really beginning to challenge them economically and military. And this is getting to a point now where this could really get out of control, and Taiwan could be the trigger for definite, obviously, into military conflict. But I can see, and he's also, I think, can see a lot more economical conflict already bubbling and going up against each other. So I can see that's where his thoughts are. He's also done another article where he's put, imagine what sanctions on China would be like for the world. Supply chains would collapse, economic activity would dive, and inflation would soar. So what he's saying there, obviously, if the world put sanctions on China like they've done with, say, like with Russia, then what massive effect would that have on the world? Being that we get, as obviously in the UK and the US, we get so many products from China. China makes so many things and ship them out to us. If we put sanctions on that, it would make a massive impact on the world economy. And inflation would go sky high through the roof like we've never seen before. I mean, this is his fears. This is what he sees possibly happening. And I think this explains what he's been saying in the press and reading his book. I think this is obviously explaining his methods of why, not his methods, but his thought process on why I believe he's got rid of these companies in China, because he sees some major conflict there. And if that happens, these stocks definitely are just going to be possibly delisted or completely collapse on the stock market. So that's what's happened. It's big news. It's a big news for obviously people's portfolios. A lot of people hold Alibaba in their portfolios. So it's a lot to think about. It's really interesting when Ray Dalio, who's been probably one of the biggest Western promoters of China and one of the biggest investors into China, he's probably one of the biggest for many years now, promoting China as the massive economy to invest in, and he's completely changed tact and pulled out. So this is really interesting news, and I thought it was worth sharing with you guys. So I hope you really enjoyed this, and remember to like that button, smash that like button, and subscribe. So I catch you soon. Okay, take care.